A recent report from the Productivity Commission, released in September 2024, looked at childcare, and they delivered some key findings. And one of those big findings from that report is every child in Australia should have access to a minimum of 30 hours of quality childcare.
Hi everyone, thank you so much for joining me in another executive interview. Today we have a guest, Nguyen, Managing Director of Atlasia Capital, a fund manager that is specializing in childcare property development investments. John, thanks for joining me.
Thank you for having me.
So John, let's dive right in. So can you elaborate on how Atlasia Capital's expertise in both childcare operations and property development gives you a unique edge in identifying and executing profitable projects for the fund?
So first and foremost, I'd just like to say that we are childcare people, and it is the passion for childcare that helped us, create this fund. So a little bit different to possibly other funds where they may come in from financial backgrounds, but we're industry people, so it's in our DNA. Richard, my co-director, he's got 20 years experience in operations, childcare property development. So he lives and breathes this, every day. Myself, slightly different pathway. I've been a more recent entrant into the industry, but my first exposure to childcare was my own two children. Maddie, she's 7 now, so she's finished, but Harvey, he's still there. So I still go through those motions every day, taking him to the childcare, doing the drop-off, handing him over to the carers, coming back at the end of the day and just hoping that everything's been okay. And as part of that, as I started to learn about the industry, I wanted to learn more, and I put the time and effort into becoming an accredited provider for childcare services. So both of us together, we have a very innate understanding of this industry and what it's all about. Now, in terms of the actual expertise and how it gives us an edge, childcare, it's a very highly regulated industry. And that's kind of across the board. So whether you're doing the property development, so the planning and getting the approval for that, or the operations of the business, so the ongoing compliance that goes around that as well. So we know what operators want when it comes to running their businesses and the properties that they want to secure. Okay, so with that understanding, I think that gives us a particular edge over some of the competition. And thirdly, in terms of property development experience, with that background knowledge, we can identify projects that are going to do well. So we know which projects are well planned, cost effective, and going to be efficient in delivery. And that goes a long way in completing a project on time, on schedule, and hopefully on profit.
Yeah, absolutely. It's truly very fascinating, and it's clear that your passion and your experience really drive your approach. Now, shifting our focus to the broader market. So the childcare industry in Australia is described as a $17 billion market. So what specific market trends or government policies that do you see are key drivers for growth in this sector over the next 3 to 5 years?
It's an exciting time to be in the industry. The Australian government's are highly supportive of our sector. Always been bipartisan support, whether it be Labor, Liberal. And just to kind of, ram that home even further, a recent report from the Productivity Commission, released in September 2024, looked at childcare, and they delivered some key findings. And one of those big findings from that report is every child in Australia should have access to a minimum of 30 hours of quality childcare by the year 2036. Okay, so governments are looking at this. They know that there's a benefit to the society, and that's just going to increase. So that's still to come, but it just shows how much research and understanding there is of our sector now. So that's really exciting to see. In terms of more general market trends, the change in the workforce, changing the ways family incomes are derived. So the increase in dual working families, the increase in female workplace participation rates, they're well documented, and they're driving the demand for childcare services. And in an area of interest for me particularly, if we're talking about broader market trends, is the introduction of AI and automation into society. Now, if we're going to look into the future, how quickly are these changes going to happen? We don't know. Some people are, predicting it's going to come quicker than we realize. But, when I think about AI, I'm talking about the trends in the workforce. So AI automation, it's going to replace some jobs, particularly things like low-skill jobs. So process workers, general admin. So if those jobs are being replaced, the workforce needs to be redistributed into other sectors. Now, childcare is a prime sector to be able to take in these people, retrain them, and have them as contributing to our society and our economy. All right, because childcare, fortunately for us, and as we all know and as we all understand, it's a sector that will always require the human touch. So in terms of AI and automation, it's actually a good thing for us, for our segment.
Absolutely. Well, those are very compelling factors for growth, especially the impact of AI and automation as you have described. Now, let's talk about the returns. So your fund targets a 15% annual return, which is very impressive to many investors. So can you walk us through how you actually manage the risk while aiming for such returns, particularly in the context of taking second mortgages?
Yeah, we do offer a return of 15%, but we only do that through a very disciplined approach. Okay, we have to manage the risks. Now, every investment is going to have risks, but yeah, that's core to what we do. Now, just on a basic level, I'll just kind of run you through what we do look at. Now, the project at a minimum has to meet certain supply and demand criteria. Okay, so we have to know how many kids are in that area, how many childcare spots are available for those children. And there has to be a sufficient gap there for us to know that the project is viable, not just today, but also in the future.
Right.
Okay. And then in addition to that, of course, our projects have to be backed by a valuation report that can be relied upon for the purposes of the loan. Okay. So they're just key fundamental things that are non-negotiable on any project. Now, in addition to that, to help mitigate our risks, we do offer a second mortgage and an LVR of up to 70%. Now that's, in terms of second mortgage loans, that's quite conservative. If sort of traditional markets, you're looking at up to 75, but we want to just scale that down to give the investor a little bit more confidence in us that we can deliver, okay? Now, 70%, just to kind of break it down into, more layman terms, 70% means for every $700,000 loaned out, there's $1 million in real estate asset there to back it up. Okay, so that means that there's enough buffer there to allow for any fluctuations that may occur. Okay. In addition to that, we also have a metric where we will only allow up to 20% of the development costs to be attributed to that loan. So what that means is there's sufficient risk shared amongst the investors and the developers, okay? So then that like everyone's got alignment of goals and we're all working towards achieving the same thing. And of course, just read our IM if you want a full disclosure of all our risks.
Amazing. Well, thanks for explaining that. And it's clear that risk management is a key focus for Atlasia Capital, which many investors watching this interview would really feel safe about. Now, I understand that your team has quite an impressive track record, as you mentioned at the start of the interview. So with over 20 years of experience with your team in childcare and property sectors, what have been some of the most valuable lessons learned and how are these insights applied to the current fund strategy?
I like to break things down into simple terms. Okay, so we're talking about real estate here, real estate fund. So when it comes to property, location is key. Okay, it doesn't matter if you're doing childcare, if you're doing retail, if you're doing office space, location is important. And why is that important? Because you want to know that there's strong demand for your product. Okay, strong demand for your product means that you're going to have better occupancy rates. You're going to have longer term stability. We focus on these areas where there is a clear gap in the supply and demand, and that the population growth is helping to fuel this demand as well. Okay. The other key thing is the operational quality. So, yes, location is key, but we support that with a high quality operator. Okay, so that's just as important. So childcare centres are typically signed on long-term leases, 20 years, 30 years, very common. Now, it's all well and good to sign a 30-year lease, but if you're incapable of operating the centre, well, at a high standard, then the occupancy drops, the fees payable drop, the rent chargeable drops, value of the property drops. So it's all interlinked, okay? So if you've got a high quality tenant in there, they're really good at what they do, they keep the kids happy, they keep the staff happy, they keep the parents happy, then the landlord's happy as well, okay? And that holds the property values up. So when we're talking about property, it kind of all breaks down into that. So, that's just what we focus on. So we are in the property game, and that's key.
Now, John, let's consider the broader economic picture. So given the essential nature of childcare services and government subsidies, how recession resistant do you believe this investment is compared to other real estate sectors?
No industry is recession proof, but childcare, over the journey has shown to be very resilient to different economic factors. So we've all lived through this, over the last 5 years. We've come out of COVID, post-COVID, high inflation, but childcare centres have continued to hold their value, increase in value, in fact, and childcare operators are still very profitable. Now, why is that? What makes childcare different to other industries? Well, during tough times, people need to work. So they can't derive any income, generally speaking, if they're at home looking after the kids. So it's an automatic situation that they pop into the childcare and then they get out and try to earn an income and to keep things together. Now, luckily for us in Australia, the government recognises this, and there are substantial subsidies for childcare for families. Okay, up to 90% subsidies in many cases. And this is one of the key things that helps support this industry and during the tougher times. Now, if we compare that against other segments of the real estate market, things like retail, hospitality, we've all seen the horror stories of companies having to shut down. And even if we compare against, say, office space, they've had their own difficulties. For different reasons, working from home factors. So, childcare is very resistant to the many factors that can affect other segments of the property market.
Absolutely. And I have to say that those are definitely compelling pointers that you have mentioned that actually highlight the stability of the childcare sector. Now, as we look to the future, what potential challenges do you foresee in the childcare property sector, and how is Atlasia Capital positioned to navigate these?
So all industries are going to face challenges, and childcare property is definitely no different. One of the obvious things that we need to be mindful of, today and going forward, are rising construction costs. Okay, so again, just looking back over the last few years, we've seen the challenges that a lot of property developers and builders have faced. Hindsight's great. No one could have predicted, the inflation and the rising costs that did occur. But history is there to teach us a lesson. Okay, so we learn from those times, and then looking forward, we always did, but looking forward, you got to expect the unexpected, and then you just have to allow enough contingency in your project, to ride out any bumps that may arise. So we'll always keep a close eye on the market forces. And just always allow enough buffer there so that we can, get through to the end of the project intact. Probably the other big challenge that the childcare industry will face is, workforce attrition. So historically, childcare is heavily reliant on human labour. There's a certain ratio that every centre requires to provide adequate care to our children. And to be fair, a lot of the workers who do it, they do it out of passion. Not so much for the wages or any sort of high esteem. They do it because they care for the kids and they love them. But some people find out that they're not quite suited to the industry. It can be challenging. Dealing with parents coming in. Lots of questions. So the attrition rate, people kind of getting into the workforce, into the industry and then leaving, over the time has been, there's a bit of a changeover there. But there are things that are happening that we see will help address that. So the recent government increase in childcare workers' wages, 15% increase, goes a long way to help support that. And the other thing too is, the way that we would sort of mitigate that is, we'll just always work with high quality operators. Now, high quality operators, that addresses a lot of different aspects of the business, but, having a good work culture, having pathways for development, personal and professional, are very important. So we have to identify that and make sure that, the operators that we work recognise that and have those type of mentalities in place.
Absolutely. Well, John, thank you for sharing these insights with us today. I have to say that your expertise in childcare property sector is very evident, and it's clear that Atlasia Capital is well positioned in this growing market. For those watching this interview, if you would like to get in touch with the team at Atlasia, please see the details at the side of the screen or in the description of this video. Once again, thank you, John, and I wish you all the luck with your venture moving forward.
Thank you so much.
Thank you.